Last week's budget had a number of new announcements. One of the biggest ones with regards to the businesses that we work with was the changes to the employer NI and minimum wage changes. There's obviously going to increase cost to a number of businesses, and so we've created a schedule so that you can see what impact this will have to your business, and we can plan ahead to make changes so that it doesn't impact the bottom line. What I've done is recorded a short video talking you through the schedule so that we can send it out to you and you can plug the figures in for yourself. And then if you need some follow-up, any advice or support, you know where we are. So without further ado, I'll jump into the schedule. This first tab is a quick check just to see the current impact the changes in the employer NI is going to have. So if we've got £36,000 is the average salary times 6 people, put the number of employees in there. The estimated employer's NIC is 22,273 compared to 27,900. However, in the past, you only got £5,000 of employer's NI allowance. Now you'll get 10,500. This is an assumption that you qualified for the NI allowance. I think the same rules appear to be in place with regards to groups and sole directors. So if you qualified for the allowance before, or if you qualified, but the only thing that stopped you getting it was the fact your NI bill was over £100,000, you'll now get the £10,500 allowance. So the total wages cost 216 plus a 222 less the 5,000 is 233,273. 2025, you've now got 233,400. So it's only a small increase of £127. So obviously you can put in whatever figure you've got here. If we had, let's say that your wages maybe weren't at the average of 36, maybe you had a wages bill of 195,000, but you had 7 employees, so that's £381 difference. If you had 5 employees, you might actually be slightly better off. So what I've done is below this, taking that average wage of £36,000, number of employees, you can see that if you've got 1 employee, you're actually no better or worse off. If you've got 2 employees, you're £2,424 better off. Your NI bill actually decreases. 3 employees, better off as well, as with 4 employees. When you start getting to 5 or 6 employees, actually with 5 employees, you're still better off, £811. As we saw in that first example I plugged it above, 6 employees, you've got £127, so it's pretty much break even. And then 7, 8, 9 employees, you start to pay roughly about £1,000 more per employee. With 9 employees, 2,940. And when we look at, I've got a couple of links in here for the Forbes. You can see here, 0 to 1 employee, 4 million businesses. So 76% of businesses, there's no change. If it was 0 to 1 employees, 2 to 4, 14% of businesses, they're better off. 5 to 9, 5% of businesses, kind of, some of them will be better off, some will be worse off. That's the number of businesses that are within these ranges. But obviously, the number of employees that impacts or potential impacts if employers are going to be looking at getting rid of or cutting costs is a different calculation. If you look at this, if we take 3 employees as the median here, that's 3 employees times that number of businesses is 2.3 million employees. Here, if we take the average of 15 times 144, you've got 2 million employees as well. So it may well be, as we get into these higher rates of numbers of employees, the employer NI bill is going to increase, and there may well be cutbacks in these size businesses. So in order to determine what the impact is on your business, I've now got a second tab, which is the input tab, where you can actually input the figures for your business, including your turnover, what your direct costs are, and your overheads, excluding wages, and what your net profit is. Now, it then does a check to make sure, once you put your salary in, make sure turnover, less direct costs, less overheads, less your salary costs, comes back to around right now. In this case, we're slightly out, £2,913, but it's thereabouts. So you can put the right figures in. Allows you to put in the number of hours, and it also allows you to put the date of birth in. If you don't put a date of birth in, it assumes you're over 21 and the minimum wage is going to apply. And it allows you to put in what percentage of increase you're going to put to their salary. So if someone was on £22,000 this year and you're going to apply a 5% increase, it then does a calculation to work out if they're in line with the minimum wage. So I'll leave that as is. We're only 500 quid out now because I've made that small change. So from the input tab, if I go to the minimum wage, this just shows you the calculations. If they're on that first one, £22,000 a year, working 40 hours, then the current average hourly rate is £10.58. If we increase that by the 5% that we're proposing, it'd be £11.11. But the minimum wage is actually set at £12.21. Saying that they're over 21, so they are impacted by the minimum wage because it's less than that. So it's then going to make the hourly rate £12.21, and the average salary, the annual salary for next year, will be the £25,396. So again, if I change this one, if I put a 5% increase in for the person below that, 25,000 with 5%, their average hourly rate is now £12.62. So it's more than the minimum wage. So it just applies the £12.62 rate with a 5% increase. Similarly, for the employer's NI, it looks at what the current NI limit is, what the NI percentage is, and what the current NI charge per employee is. So you can see what the actual cost is. And then it looks at what the salary for the new minimum wage is and what their NI limit and what their NI charge is. So you can see the difference. And within here, we've got the summary wages costs. So what the total wages are, less the employment allowance, compared to going forward with the new employment allowance and the increased cost. But this is the one to look at, which shows you current turnover position, same direct cost overheads we had before, the summary wages position, and then that small unknown difference, the net profit 100,000, compared to, okay, if everything else is the same and our wages goes up, what's the impact on the net profit? So, as we said, £17,000 increase here, so impact on net profit of almost £18,000. So how can we combat that? Either we could increase our sales by 1.78%. That would give us an extra £17,800 of profit, which would go straight to the bottom line and mean that we maintain that net profit margin. Or we could try and cut direct costs by 17,000, which would be almost a 6% cost-cutting exercise. Or if we're looking at overheads, it'd be a 9% decrease in costs. So those are probably quite hard to implement. And with regards to wages, we'd have to decrease them by 4.27%, which means effectively divided by the number of employees, removing not quite one full person, but one full person would pretty much would give us a slight excess in saving. So from our perspective, I think it is going to result in increased prices. Like what that'll do to inflation will remain to be seen. But that increase in sales price of 1.78% is in line with the inflation of 2%. So it may well be that that is the case. However, if you've got inflation increase of 2%, there may well be increases to your direct costs and overheads. But that's where looking at the 4 ways to grow your business, planning ahead is where it becomes vital, and that's where we think we can really add value to our clients. So if you'd like to book in a 4-way session, then please let us know.